Thank you for joining us for the Meet the Funders program. I'm going to invite a bunch of our local funding organizations to come up to stage. If you're one of the people I invited to speak, if you could raise your hands, that will make it much easier for me to bring you up to stage. So it's going to take me a little bit to add everyone here. People will come up and then start populating the stage, and we can talk a little bit about what we do. While I'm doing all this typing in the background, Nate, would you introduce yourself real quick, couple of sentences?
Sure. So Nate Doran, I'm with Swan Venture Fund. We're an angel fund based out of Seattle. We've been around since 2015. I'd say we're on our 20th investment. We're really focused on what our member investors are all about. Our member investors buy into a pool and we collectively decide how we want to invest it.
Cool, that was perfect. Thank you so very much. Rick, could you introduce yourself, please?
Sure. I'm Rick Tomford. I'm here representing the Alliance of Angels. We're probably the largest angel investor group in 28 due diligence companies as a group, but then we individually in some in or out and also by magnitude.
Cool. Thank you. Minda, could you introduce yourself a little bit?
Hi, my name is Minda Bruce. I'm the founding partner of First Row Partners. It's myself, Yoko Okano, and now Karen Kidder, who's joined us as a partner. We are a pre-seed fund based here in Seattle, and we invest across North America. But about half of our portfolio ends up being from the Pacific Northwest, which is terrific. And in addition to sort of the funding work we do, we're always out in the ecosystem because we really believe that mentoring and early stage funding go hand in hand. And our kind of mentoring means really sort of sharing as much as possible about the investor perspective so that founders can have an opportunity to break down some of the barriers.
Cool. Thank you so very much. Gary, how about you?
Yeah, I'm a co-founder president of the Puget Sound Venture Club. We were started in 1985. Small group by style. We got a 40 member cap. Since inception, our members have invested about 190 million into about 1,200 companies.
Wow, that's a big number. Thank you. Dan Delmar, how about you?
Hi, I'm the founder of Virtual Angels Network. We are a completely virtual national, actually in North America, group of MBAs and other advanced degree holders. We were new starting last year. We've had a couple of very good meetings and investments, and our last one last week was very successful with a number of companies going into due diligence for funding.
Cool, thank you. Elizabeth, could you introduce yourself? Apparently, Elizabeth.
Hi.
There we go.
Yeah, no, here I am.
Turn your camera on too. No.
Camera on, yep.
There
we go. So Elizabeth Cross-Nickel, and I'm actually with Apis Health Angels, which is an offshoot of Seattle Angel Conference. We're using the same model, and we're focusing it on health startups. Our definition of health was broad. So we have some CPG right through to companies that are going for INDs and new product. So it's an interesting spread. We've just finished our move from 56 companies down to 20. We're glad to showcase more of those companies in the next little bit.
Well, thank you. Juan, how about you?
Thanks, John. I am Juan Arango. I'm the executive director for Cretu Forum Northwest and Rockies. A little bit about us. We have 6 chapters in the Northwest and the Rockies region, close to 400 members now. Globally, we do have 65 chapters all over the world, over 3,500 investors on board, angel investors. Last year, we invested into just our region, invested into 78 companies. We put close to $60 million into them. And we are industry agnostic, and we invest in companies that are in North America, including, Canada and US.
And
That's
Mexico
us.
too? Do you do Mexico too?
We do not do Mexico. We have not invested in Mexican companies yet.
Okay.
But yeah, not as far as I know.
All right, cool. Chris, how about you?
Hi, thanks, John. Chris Bradbury. I'm representing Grub Stakes, which is a group of individual investors in the Seattle area. There are about 40 members. We make individual investment decisions, so it's not a fund, but we tend SPVs for each investment, allowing investors to diversify the risk by writing smaller check sizes and more checks, and makes it easier for founders because there's just one line item on the cap table. And we're pretty broad as well, but mostly tech.
Cool. Thank you so very much. I keep hoping that Eric Berman is going to pop up here in a moment from E8, but there we go. Hi, Eric.
Hello. So I'm with I'm with E8. We're in our 16th year, focusing exclusively on Cleantech. We're up to about 130 members. Pool due diligence and deal flow, but make our own individual investment decisions. Launched a small pilot fund a few years ago. Are in the process of launching a new $50 million in this quarter or next. And we've invested collectively about $45 million across, 130, 140 companies or so.
Cool. Thank you so very much. I want to ask a few questions around how this thing works. The goal of this for me is we have alumni from the Seattle Angel Conference, and we have alumni from future APIS alumni with the intent that they go on to other angel groups. So partly I want people who are thinking about what's my next step after I'm an investor in SAC, what should I do with another group? So I want them to know who you are from an investor point of view. But on the other hand, we have a bunch of startups that are seeking funding, and they're trying to find angels. And one of the things that they tend to do is they tend to do this, I'll call it spray and pray approach to finding an angel investor, which is if you have angel investor in your lapel pin, then all of a sudden you get a whole bunch of requests without any due diligence on you. So we understand that you are very different from each other in various ways, and I would like to highlight those specifically. So I believe there are networks, there are active funds, there are passive funds, there are managed funds, and there are event funds. SAC and APIS are event funds. Minda is representing First Row Partners, which is a micro VC, which we will call a managed fund. Eric, you are part of E8, which is a network, but you just mentioned the $50 million fund. So tell me how can I have a network and a fund play nice together?
Well, there are a bunch of different models for that. Some networks actually have a sidecar fund that is passive. It's almost like an index fund. Whatever the individual members invest in, that's what the sidecar invests in. We did not do that for the pilot fund. Instead, we treated the pilot fund as a deeper pocketed member of the network. Because it could write larger checks, it attracted some nice deal flow, and it also proved to be a signaling mechanism to other members of the network, which is kind of an interesting, unanticipated side effect. Ooh, is the fund investing? I'll write a check. Oh, the fund's not investing, I'm out. So you want to be a little bit careful of that. The new fund, because it's going to be writing even larger checks still, my guess is there will be a little bit more differentiation between what it invests in and what the network invests in. Later stage, perhaps, just because of the ability to absorb a larger check size. But I imagine there'll be a lot of companies that will look at and will say, this is the fund should look at this, not the membership, or the membership should look at this and not the fund. Stepping back a little bit on that, our goal is to make sure that in our members, our investors, have a choice of vehicles by which they can invest. They can write a personal check. They can invest via the fund, which is a very passive thing. We've been doing a bunch of crowdsourcing so that they can sort of use a trusted investor as their proxy. So we're viewing it from the investor side as a portfolio strategy to make sure that we've got appropriate investment vehicles for each of our members. From the investor side, I don't think you'll actually see all that much difference, except that there might be some differentiation in the kinds of deals that the fund is interested in rather than the membership.
Yeah, okay. So then we go to Nate, and Nate has Swan Ventures, and there's the Swan Ventures group, and there's the Swan Ventures fund. Can you help us sort of figure out what those two things are?
Right. So Swan Venture Fund, I mentioned that before. It's an angel fund. We're in our third fund. We're investing in really what some might call pre-seed rounds or series seed angel rounds. It's really the first round after friends and family, or say you go to an accelerator. But I'd say that we've been doing that a lot longer. Swan Venture Group was a project that sort of spun out from that. It's more VC focused. These days, they've been really focused on a venture capital strategy and partnering with Japanese companies, bringing them here and trying to help market some of the investments that are made on through that particular fund. So they're raising money from Japanese investors and U.S. investors, and they're investing into Pacific Northwest companies. So it's very focused on the Pacific Northwest, and it does help to develop business for a lot of portfolio companies, even for the Swan Venture Fund. But I would say they're different entities. It's a different strategy, different LPs.
And so the companies need to be really clear about where they're trying to go and how they're trying to go with that, and if that's all. To get to the right person, because they're fundamentally investing with different investment theses, right?
That's right.
Yeah, and then
different websites.
Yeah, enough brands crossover that people have to think about it a little bit. Rick, can you tell us about Alliance of Angels and the Alliance of Angels Fund and how they're different?
Yes, I can. Thank you. The primary investment mechanism is still the individual investor. So we, as I say, we diligence as a group. Individual members write individual checks. But we have had in the past, and we are right this week, launching another sidecar fund. This is Fund 3, if you will. And our own members, units in the LLC, as most funds are, and it adds on to investments. Members are the members and our general membership. When there's a popular deal or a hot deal coming, we'll contribute there. The new fund will have about an expected 1-year life. They'll deals 1.5 each. participation level. And then we'll expect a fund 4 in a year and a fund 5 and so on. So the message to the entrepreneur is, as you approach the Alliance of Angels, you get exposure to both at the same time. You'd apply, you go through the diligence process, and you might get individual investor checks as well as fund checks. So one-stop shopping.
Cool. Thank you so very much. So Grub Stakes doesn't have a fund. Juan, you have a thing called Kretsu, and there's Kretsu Forum, and there's Kretsu Capital, and those are different in some way. How are they different?
Yeah, absolutely. Thanks, John. So Kretsu Forum is our our angel group, and as many of the groups here, we make independent investment decisions, do pretty in-depth due diligence. And when due diligence is done, when companies have about 70 or 80% of their round closed and they have 5 or 6 Kretsu Forum members, our Kretsu Capital funds take a look. They go through an investment committee and decide, whether to put anywhere between $50,000 and $200,000 into companies. Now, we are launching our 5th venture fund. We have maybe close to 200 companies in the other four. But in addition to venture funds, we have another 2 funds. One of them is the real estate fund and the blockchain fund of funds, which we're very fortunate to have general partners in the Bay Area, Matthew Lemuro, and a couple of board members of big banks. So we have access to like phenomenal blockchain deals and funds. And actually the ROI on that one is like 70%. So it's insane. We just launched the second blockchain fund of funds, raised like 15 million in a little bit less than a month. That's how we work.
Yep. Cool. So Gary, you have the oldest angel network in the Northwest. You want to tell us a little bit about Puget Sound Venture Club?
Well, it's my background was a stockbroker, and I got involved in investment banking. An attorney friend called in 1985 and said, "Hey, these angel groups are starting, and we should have one in the Northwest." So I called some guys, and that's how we got started. We don't have a fund. As I indicated, our style is to stay small, although some members I can tell want to increase the membership above 40. What are we good at? I can tell you what we're weak at. We have the talent to do it, but just our history, organized due diligence, we're weak at that. What usually happens is 2 or 3 members get interested, and they will go organize the due diligence, and they'll tell everybody if they want to sit in on the due diligence, they're welcome. But I would say that's our probably our biggest weak spot is organized due diligence. Our obviously in 2020, and I'm just collecting for 21, and it's going to be a down year, because in 2020 we did a little over 20 million, and that was a record for us. That's like 500,000 average per member, so that was off the charts. I am urging everybody to fill out their form for 2021, so the drop off is not real severe. John, I don't know if that's answering anything.
No, that's good. I'm trying to give people a perspective on where you're at.
John, let me mention quickly what we're interested in. Our sweet spot is the product is done and they're looking for go-to-market money, except for life science, obviously never done it, and we do a fair amount of life science.
Yeah, thank you. Dan, you want to tell us about your newest fund? Gary's the oldest, you're the newest. What are you doing?
Thank you, John. So in terms of this issue of a fund versus a total network, we're pretty far over at the other end of the spectrum from a network. We do leverage teamwork in all stages of our process in thoroughly vetting the companies before we decide the very best ones to invite to our pitch events, and leveraging the knowledge of our members, who are all very experienced and can contribute to the questions and the private discussion that we have at the end of the pitch event. And then in the due diligence, and we have a pretty well organized approach to gathering all the people who have any interest in a particular company, potentially investing in it, and having them be the due diligence team, appointing a clear due diligence leader, and doing some pretty good thorough work before ultimately, which is the key, each individual member invests based on their own decision. It's their own authority and their own responsibility, and they actually do it directly, legally, directly to the company. We haven't done any SPVs, although I used to be exposed to that in my previous group of Harvard Business School alumni Angels of New York, but we're not doing that. So ultimately, in the end, we're very much individual investors.
Yeah. So what's an SPV, just so that people in the room don't know?
I think it stands for Special Purpose Vehicle, and it's just a way of, somebody else had mentioned it before, a way of gathering a number of typically smaller investors, smaller investments into one investment that goes on the cap table of the company as one, rather than having a large number of different investors, which can be of some interest to the VCs who might invest in late rounds. How much of a dispersion there is in the of the company.
Right. So for Seattle Angel Conference and for APIS Health Angels, we always take small checks since our unit size is $5,000, and we always form an SPV. So that's, on the opposite pole of where most angel networks are at. And we see that at E8, sometimes E8 has lead investors that come in at their $25,000 unit level. And then if enough people come in at that level, they arrange for smaller numbers to come in. Can you talk a little bit about that, Eric, so that the angels can understand how they might be investing at the level that's appropriate for them?
Yeah, Dan, I think, summarized the purpose of an SPV very accurately, but I want to just sort of put a fine point on it. It's usually about, the whole reason companies have minimums is cap table management and communication management. They don't want to have too complicated a cap table, and if they need to make a change, they don't want to have to communicate with 20,000 people. And I think there are regulatory issues and so forth. I'm going to very quickly get over my head on that. But what we have successfully done with a lot of companies is we say, hey, look, if we can, in aggregate, make ourselves worth your while by producing an aggregate check of $200,000, let's say, or $100,000, whatever the amount is, will you take incremental checks beyond that are below your desired $25,000 minimum or $50,000 minimum or whatever it is? Because that saves, the beauty of an SPV is that you're pooling a whole bunch of small checks, so you can get a lot more check writers in. But there's added overhead and expense of setting it up, of managing it, of dealing with any distributions and so forth. And so if you can get the company to accept the smaller checks and for it to be worth their while, you get incremental investment. And so we've had a number of companies where we've met the threshold. And so when we send that out to the membership and say, hey, a bunch of us are getting together and investing in company X, and now they're going to accept additional checks at $10,000, you actually get a bunch of people writing checks, because $25,000 That's a lot of money. You got to do your due diligence on that. $10,000, still a lot of money. You really should still do your due diligence, but you can probably proxy it a little bit and say, you know something, I trust those people who are doing this, and it's a lower. I can get more diversification at $10,000 than I can get at $25,000. And so we've had investments that in total have gone up by 70-80% because of that mechanism. No SPV required.
Right. Yeah. So, and the company was generous when they did that because it gave them some overhead later. But, and you are correct that SPVs cause specific overhead that messes up your investment returns a bit. Nonetheless, I sort of want to get you to give me as a group what your unique value proposition is. You know, so we work in the Seattle Angel Conference to figure out what's your investment thesis. Are you a unicorn hunter? Are you a change the world and make it cleaner person? Do you want local jobs? Do you want more women investing? Just what's the reason that you're putting money into this process? And so I'd like to hear your sort of what kind of investor ought to be coming to join your program. Can we just go around real quick? I'll start with Rick.
Well, we, as I indicated, we're a larger group with 140 some members, and we necessarily look for diversity within our membership, protect diversity within our membership, and then necessarily professional diversity in the entrepreneurs that we support. So while being in the Pacific Northwest, you know, IT has always been king, and we're heavy in IT. But over the last 4 or 5 years, we've done quite a bit with life sciences. We've done a little bit of green and energy. We've even done some ag science. So it's sector agnostic, of course, is the buzzword. And necessarily we have members and a very deep bench from all of those areas. Now, the value to the entrepreneur, in addition to taking on all comers, is we have members that are experienced in these industries. So more than writing checks, we offer mentoring and coaching through the diligence and screening process. Post funding, you'd expect to get a hand or a mentor or perhaps introductions to people down the road to help you succeed in your business, and ultimately through the acquisition process. So we're a big brother shoulder, if you will, to lean on not only up front, but down the road and in, as I say, many professional sectors.
Cool, thank you. Minda, could you sort of identify what kind of investor you're looking for at First Row Partners? You're on mute. You're on mute. Minda, you're on mute. You have to go down to hit the mic button on the bottom of the screen. Let me try this. No such luck. While you play with that, in the worst case, you have to do a shift control R to reset everything. I'll go on to Gary. Gary, give me your, couple of sentences about what kind of investor you want to come to your group.
Highly ethical, highly motivated, 1 million net worth, and some history of venture investing.
Yeah, that sounds pretty general. I bet that you want bigger net worth than $1 million, because that in my world translates to a $5,000 check instead of a $50,000 check. So I bet it's narrower.
Well, we start our process by me doing a phone interview with a prospective presenter. And when we get to the minimum, I always say do 50, because we got people, if you do 25, then they're going to write 25. But if you do 50, our guys and gals can do 50. And maybe we're getting off subject here, John, with my context. I would add one more thing that's come up, and we're doing our annual survey, and I can tell some members are not happy with our diversity. We need more female members, I am told. Anyway, I'm getting off subject here, John.
No, not really. You want high net worth individuals that are female and not represented in normal groups. So that's a good call to pull people in. Dan, what represents your desire for new angels into your group?
Well, we are aiming to be the highest quality, totally virtual group in North America, and we're making some progress. The criteria for our membership is somewhat exclusive. It is people who have an MBA or any other advanced degree, computer science. And we have an MD who also happens to have an MBA and so forth. And so the quality of our members leads to leveraging really finding really good quality companies. They typically, our typical investment is 25,000, but there's some individuals, several have written 50,000 or even made $100,000 commitment over several years. And again, a criteria that we don't have is we have no history, let alone a criteria of any geographic location. So although I am based in the Seattle area, the majority of our members are all over the country.
All right, cool. Juan, tell me about your Keiretsu shining light. What kind of investors do you want to be attracting?
Okay. So Keiretsu Forum, we are a professional angel investment group. Our main purpose in life is to facilitate funding for startups. Our investors are, as I mentioned, professional angels. They are typically former entrepreneurs that have been there, done that, and then they want to pay it forward. And they've exited their companies, and now they have enough expertise to raise, all these startups several levels up, fund them, and get them rolling. We can do diligence, like I'd say, with so many members, anything on the planet, anything you can throw at us, we have the network to figure out if it's a good deal or not. We look for investors with a lot of initiative, investors that want to work together to source fantastic deals, to due diligence them to get them funded, and to get them sold in the end, because that's what an angel investor wants. Right now, we are growing at a pace of about 10 or 20, between 10 and 12 new members a month. And yeah, if you want to join a strong group and just share the knowledge and become stronger by contributing with your experience, this is the group to join.
And you have no cap on the number of members, right?
I want to have 5,000 in my region.
Yeah, there you go. So, Eric, tell us about your unique value proposition of what kinds of investors you want in E8.
Well, at the risk of a bad nerd joke, the standard physics model is wrong. There are not 4 fundamental forces of physics. There are 5, the 5th one being capitalism. And we are believers that markets and innovation are the best way to achieve our sustainability goals. So the kinds of investors that we have are people who understand this sector. So we don't have any medical expertise, so don't come to us with biotech deals or anything like that. But you come to us with a solar financing deal or a battery storage deal or a clean water deal, we have people who understand this space and can really do that. So, we do the collaborative due diligence, and we can evaluate these deals and figure out, can they actually pan out and achieve their financial goals in addition to their sustainability goals. And I should actually just to repeat that point a little bit is, it is super important. If you can't make money, your overall impact will be zero. So we do believe that making money by doing good for the world is the most powerful way to do good for the world.
Well, thank you. So Minda, welcome back. I see your little mute is off, so let's see if that works.
Yes. Can you hear me okay now?
Yeah, I can hear you okay.
Okay, good. Sorry. My computer got to the end of the day and it just sort of was like not ready for the next step. So I had to reboot. Okay, so question was a little bit about the kind of investors that we have. Is that
No, what kind of investors do you want to recruit? In your fund or in your next fund, who do you want knocking on your door giving you money?
Yeah, well, we designed the fund to be something that could be an entry level to being an LP in a managed fund. And by that, we mean a couple of different things.
What is an LP?
A limited partner is a person who invests in a fund. So they're an accredited individual, just like an angel would be, or they might be an institution or a family office or some other type of investor like that. But those are what we call limited partners when they're brought into the fund. And I won't go into the architecture. And these LPs that we bring into our managed fund are a lot of times angel investors. And for many of them, this is their first fund that they've invested in. And I think that part of the experience that we try and deliver and the people that we end up attracting are those that are sort of interested in being angel investors and investing directly alongside what we do or in the SPVs that we bring them. But they also really like to see and observe our process and what we're doing along the way as we manage the fund and make those investments, because we don't have a collaborative due diligence process. We may bring in various XP network or from our general network, but it's really, Yoko and I that make the final decisions on our investments that we make out of the fund. So I think that what we do is on a quarterly basis, really try and find a unique way to do some sort of event, workshop, or something that gives our LPs a window and an insight into what we're learning and what we're seeing and how we're looking at the fund. And we also do quarterly newsletters on our themes for investing and what we're seeing. And so we're trying to really create a way for angel investors to also invest in managed funds, because we think that as you look to sort of diversify and create a portfolio effect, funds can be a really great way to bring that to your angel investing. Because I think, John, you've espoused this many times, that getting that sort of magic number of 20, maybe 40 deals in your portfolio is the way to start looking at it as an investment strategy, not just as something you do hoping for, that an individual investment will produce a return, but the portfolio to produce a return. And so in that sense, we try and be part of somebody's bigger investing, angel investing, venture investing experience. So we do that by having our minimum to participate in the fund also be commensurate with an amount that we believe that you can still do outside investments alongside this and not have to choose between being an LP and being an angel investor. We really look at it as being both, but we want to provide that managed fund experience as well. We think that there's a real appetite for that.
So some people will go through the angel conference and say, golly, this is a horrible experience. I don't want to do that ever again. And they quit angel investing because they think it sucks. And some people come into the program and they say, gee, that's a lot of fun. I really enjoyed it, but that takes way too much time. And they might choose to go into one of the funds that people are doing, or they might choose to go into your managed fund where they get a little bit of an insight to what's happening, but they don't necessarily get all of the work to do. And then if they want to be really active, proactive people, then going to Grub Stakes or going to Kretsu is specifically where they want very active angels to do good due diligence and to participate actively. And it's really hard to participate actively. If I'm in a fund or if I'm investing over a 5-year period and I'm going to get into 40 deals, then I'm doing 8 deals a year. That's a lot of work, right? That's like real job. And so maybe I want to take some part of my portfolio and set it off to let somebody else do the due diligence, and I'll focus on a smaller number to build out my portfolio. And am I interpreting that well?
Yeah, I mean, I think that the amount of time that it takes to build that portfolio and do it meaningfully is a real challenge that everyone deals with differently in terms of how much they enjoy it and how much time they simply have. One of the things that we've done is in our LP portal, we provide a copy of all of our investment memos. So we understand that our angels want to understand our thinking, but we also hope that it sort of helps them see how we break down deals. And we even run an event every month where we all break down a deal together that is outside our investment pipeline, but it still is a window into our framework. So I think that just being who Yoko and I are, which is that we like to explore and share and continue to learn, we like to kind of provide that window in, because we truly believe that even if you're not spending the time to do due diligence, you do want to get better at sort of asking great questions that helps you efficiently move through to the idea of, is this something I want to make an investment in or not?
Right, that makes sense. I want to go on to Chris and get a sense of what is Grub Stakes and what is the thing that makes it unique compared to the other ones, and what kinds of investors do you want coming in?
Great questions. Thank you, John. So I guess, first of all, we don't have any fees. So we're not like some of the larger groups around town that charge to have members and would like to grow their membership base to grow their fees. We're just a group of investors. Some of us do this full time, some have full-time jobs. And so there's kind of a wide range of activity levels and involvement, but we do want people who are active, willing to write a check, willing to help out in due diligence and source deals, and people who have had a little bit of experience with it. So maybe beyond just doing a SAC or two. And so are kind of at that, beyond the early, mid, even later stage investors. They've been at it for a while. Check size doesn't matter because we can put together a special purpose vehicle. And so, sometimes we'll have, 5 or 10K, but you multiply that by, say, 10 members, then you get to 100K, and all of a sudden you show up on a cap table and, entrepreneurs are interested in talking to you. So that's probably what sets us apart. And also we're willing to have conversations with, very early, we have office hours. We'll sit down and brainstorm with you. And, if you want to talk shop, we're happy to give you an hour or a cup of coffee and help you on your way, because we just like doing this stuff. And we want people who like doing it as well.
Yeah, so you always do SPVs, right?
I mean, sometimes we'll find a deal we just love, and it's a smaller number of people, and we'll meet the the minimum check size individually, but by and large, we always do SPV. Yeah, and our average check size tends to be about 120K.
Yeah, okay. So we represent among us probably on the order of 80, maybe 90 million that's going into the ecosystem. We represent among us on the order of 1,000 people, plus or minus a couple hundred, doing stuff. So this is the main motion for angel investing in the community, and making things go. When companies apply to you, should they just write all your names down and send you a thing over the transom and expect to get something. Yeah, I see the cross from Eric. So how should, I'm seeing people pop all of their information into the chat about who they are and how they're really great. Like I'll pick on Garrett just because it came to Open Coffee this morning. He's doing a fresh grease thing, trying to get bicycle things going. Would it make sense for him to just send a deck to all of you? And Eric, you said the cross thing, so I'll let you start.
Yeah, no, I wasn't on mute. I was deliberately just doing pantomime there. I mean, I was on mute, but anyhow, yeah. No, sending an email or reaching out, sure, it's nice, but it's so often trying to game the system. We have a process, and it's for a reason, and it's actually for the benefit of the entrepreneur as well. If you try and sort of go around the process and just try and corral individual people to get in front of the group, then you're going to fall through the cracks. You're not going to get evaluated properly, and it can actually sometimes leave a bad taste in people's mouth. So find out what the angel organization's process is and follow that. Please, please, please. It's fine to, in addition, reach out and do that. But it shows that you're doing your homework. It shows that you understand the organization that you're seeking funding from. And frankly, it's respectful because we get so much noise. I'm sure everybody on this panel gets a lot of noise of inappropriate deals. They're not at the right stage. They're not in the right sector. They're not in the right geography. They just haven't done the research on the investment thesis of the organization, and that's right there. It's a big red flag that's going to actually hurt your odds of getting investment. Now that said, if you have somebody within the organization who already knows you, who can vouch for you, who maybe has already written a check, that's a huge plus. Go through the process and then let the people who are running the process know that, hey, so-and-so is already, they're on our board. They've written us a check. They've already got a due diligence report, whatever it is. We love to know that information, but I would just strongly suggest know your funder. You got to choose your funder. So it's a whole separate topic there.
I have a bit of a contrary point of view on that, actually, Eric. And I think that this just explains that there are a lot of different ways to reach out to different organizations. But I've gotten pitched as a direct message DM on Twitter and LinkedIn. People email me. People email my personal sometimes instead of my professional, whatever they have. It's all good. We also have a form on our website. But I think that I don't want to put barriers between me and founders, and they often wouldn't necessarily know the right. I don't want them to hesitate to reach out to me because I think I want to cast as wide of a net as possible. And yes, it does generate a lot of noise, but I feel like that's my problem, not theirs.
And to be clear, I don't disagree with that. It's like, hey, can I understand a little bit more about E8? Are we possibly a fit? That kind of call every 24 hours a day. I'm happy to have that call. But my answer is usually, either no, you're not a fit. Thank you for reaching out, or you could be interesting. Please apply.
Right, absolutely. I think one of the things I also tell founders is do your homework, segment your investors. Understand that Eric isn't going to hear about a med tech deal because it's not Cleantech, and so that's not a good use of anybody's time. So there are some obvious things that you can find, but I also know that the world of investing is too closed to entrepreneurs often, and so I always want to put it out there that I try and I think a lot of us all do try and make ourselves accessible. I think though that we all do try and create an ideal channel. But I think we all enjoy meeting with founders and want to give as much of our time as possible in a scalable way. But I do think it's important to break down some of those barriers to being, making founders worried that they're going to kind of lose their chance if they send something to the wrong email. And I don't think that's what you're saying, but I do want to make it clear to the group that, you know, there are a lot of ways to reach investors these days. And I know some investors get a huge amount of their deal flow through Twitter now, of all places, totally off channel, but sometimes that can be the best way to reach someone. So you don't always know the right way. And that's part of what must be really frustrating for the founders out there.
Yeah.
Well,
I think
wanna
part of
press
the
on-
part of the difference is
I was just gonna say for
John?
Grub Stakes, we do things similar. You know, we have on our website list profiles of our members who are very active, and if you are doing something in a space that is within their area of expertise, just reach out to them directly, and you know that'll get through into our process. So same way, we want a wide funnel and open arms.
I agree for Virtual Angels Network more with what Eric was saying about following a process. And I think some of the difference of opinion or emphasis is based on your earlier questions, John, about whether you're a fund or have a fund along with individual, or as in our case, if the ultimate investment decisions are made by each of the individuals in the group as to whether they want to invest or not. Because if you're going to a fund, then it makes more sense to the fund managers in any way you can. But if you're like approaching somebody like us, a network, we have a process on our website, virtualangels.net. There's a separate page for entrepreneurs that leads them to Gust, where they put on Gust.com, where a platform for communications between entrepreneurs and investor angel groups that allows them to put the information they need to into their deal room, so that both I and any of our members can look at it at any point in the whole process. When we're vetting them, when I get the most knowledgeable person about their industry to vet the company, they have all the information on Gus.com. When we do the pitch events, it's all available to everybody, all our members. And then afterwards in due diligence, it's all available. So that process allows us to provide the information on the startup company, the young company, to all of our members, and that process is very important to us.
So one of the things that when I think about all of your different groups, I don't think you're investing at the same level. You know, the companies that go to Alliance of Angels and Keiretsu don't get accepted at certain levels as well as they do at Grub Stakes. You know, the Grub Stakes I feel is a little bit earlier than Alliance of Angels and Keiretsu. And so there's sort of a hierarchy in my mind about the order in which they should go through that. Of course, I believe they should all start at Seattle Angel Conference and get their documents and shit together around this process so that they are better prepared to go to the other groups. But starting with Grub Stakes and Sea Change Fund makes some sense. And then rolling upstream into the other groups with Alliance of Angels and Keiretsu at the top end. How do you guys feel about my sense of that?
I would say that is how I see things as well, or how we see things. John, you guys do a phenomenal job at coaching entrepreneurs at every level. They learn incredible skills with you guys. Your angels, you know, they work them really hard, do fantastic due diligence, and once they graduate from your halls, you know, they're more equipped. They know how to talk to angels. They have the lingo. They have probably the traction, and then they can go to any other group. I would say in the Pacific Northwest, you guys are definitely the place to go first.
Cool, thank you. I appreciate that thought. I know that Eric is sort of off sideways from everybody else because he got a very specific clean tech focus, which is a stronger thesis than anyone else. We know nationally we have things like Golden Seeds and Investor Circle that have, again, these very specific theses. We don't have a very prominent medical-oriented angel group, but we see a reasonable number of medical investments by Alliance of Angels and Kretsu, but not so much early, right? So the early funding of health doesn't seem to be happening very much. That's why we started the APIS Health Angels. So at this point, I'd like to sort of open it up to questions. I see a couple of questions coming in. I'd like people to use the Q&A thing to do the questions, and I'm gonna go through that. Before I take the one that's in Q&A, Ayun asked if you guys are all making a professional living at what you're doing. I see that Eric says, all I'm making money through investment. It's not that you're taking fees on a fund yet, right? But you soon will be taking fees on a fund, right? No, you don't take any fees. No 2 and 20.
Fund takes
E8?
fees. I will be the general managers will there will be compensation. There will be a fee structure. I'm not aware that I'm going to be getting any particular compensation, except maybe some nominal one. I haven't even negotiated anything for being a venture partner. I'm volunteering my time to help juice my returns.
Yeah, cool. So, anybody making a full-time living at angel investing? Yeah,
I will
Linda,
say
you're the
that
only one.
one of the, the model of 2 and 20 is a frequent model for managed funds. And just so everyone understands what that means, the model is 2% on committed assets over the life of the fund, so 2% every year, and then 20% of the profits. And what happens is if you're a very small fund, that 2% may just cover the expenses of operating the fund, and the fund managers aren't really making anything. But at a much larger fund, that same 2% may allow them to hire a lot of staff and have a lot more sort of capital to work with in terms of the investment activity that they do on their behalf. But so there is a really big difference between how much money people are making on the management small fund versus a much larger fund. And so I think that a lot of times people who invest in funds really are, wanting to make sure that the fund manager's incentives are aligned with theirs, which is to produce the returns on the fund. So I think that question comes up a lot for people trying to understand how we make our money. I think primarily, especially with small VC funds, we're still much more like angels in that we're really incentivized on the returns that we produce rather than on management fees. But for larger VCs, the management fees become much more substantial. And so there's a real difference there.
So there's sort of a
John,
tuning point somewhere in there where you finally get a fund that's economical enough to pay a meaningful salary. And most people think that it's on the order of a $27 million fund before you really get to the point where you're paying market rates for the people running the fund. So anybody who's starting that first fund with $3 or $5 million funds, they're volunteering their time most likely.
John, if you're asking about the financial terms, I just wanted to say that for Virtual Angels Network, we charge a annual fee, normally $900 per year, $500 for a limited time, and then since the investments are made directly with the companies by the individuals, no carry and no management fee. There's no other financial cost.
Right, excellent. So I want to move on to the next question, which is, what are some of the reasons besides the project not fitting in the thesis of the fund that you turned down investing in a group? Anyone want to take that on?
Yeah, I talked to a really interesting investment the other day in Tel Aviv, Israel, and we don't invest outside of companies that are domiciled in North America. So I think there's a lot of geography boundaries, especially now with Zoom that we can communicate globally so easily. I always have to ask, where are you domiciled? And so that is a key reason why we would not invest beyond just something not being in our area.
But what would make, a Seattle company that's right smack dab in your interest area not investable for you?
Well, sometimes if they're a very technical, if the company has to be really great at building a certain technology and the business person really has the vision but hasn't yet recruited a technical co-founder, that for us is a reason why we would not yet invest, because and that's not true for everyone, and that may not be 100% true for us. I never want to say, never say never, but that would be a key reason that we might decline initially.
So
I
we
love
have
this question. And it makes me think a little bit of the old brain teaser about, take the number of hairs on my head times the number of hairs on someone else's head and do that across the entire country. What's the answer? And of course the answer is 0, because there are some bald people. In other words, any big red flag in a deal is enough to sink the deal. And so in some ways you take the sort of contrarian point of view that it's the failure to uncover a showstopper deal that results in a yes decision. We often describe that at E8 as our desire is really, and this sounds awful, but our desire is to get to no as quickly as possible. N-O, not K-N-O-W. Not because we're trying to say no, but because if we're not going to invest, we don't want to waste your time, we don't want to waste our time, and we want to let you know why we didn't invest. And like the one bald person who sets the number of hairs multiplication to 0, any red flag, any 0 in that equation can sink a deal. And so you can't really enumerate them all. We just said no to a deal yesterday because they were use the funds to pay off debt from a company they were going to be acquiring. We were like, no, that's a terrible use of funds. And would I have ever enumerated that? No, I probably would not have. But we're like, no, you're using new money to pay off earlier investors, and it's a sign that you don't have a better use for the money. So, in some sense, you do want to turn it around and say you want to be comfortable that there is no showstopper reason to say no.
Right.
Yeah, and I would add a lifestyle business is a showstopper reason for us. You could have a company that's a seemingly good business, and you could make good living at it, but it doesn't mean it's angel investable. So it doesn't mean that there's a potential acquirer or that it's something that this is venture scale, and that's really an important distinction. So if you have a barber shop, unless you're going to build a national franchise chain, which in and of itself is its own area of expertise and hard for angels to invest in, that's almost more of a private equity play. Unless you have something like that, you're not going to be investing in a small business. So understanding that distinction is important, I think.
Yeah.
I would add, I like what Eric and Chris are saying. I would add some of our pre-screening questions that are kind of in that same area. For example, what is your burn rate and what is your runway? How much are you spending per month and how much do you have in the bank? Sometimes you see companies that, they just need investment to survive. And unfortunately, that's not something that angel investors really, bite into. Typically, you need to have more than 4 months of runway of money in the bank to support yourself to come in and raise money. Otherwise, it's going to be very difficult. I'd say it's like, seeing blood in the water. Yeah, kind of. You move away as an angel. Another one that we look at very commonly is, do you have back-to-back convertible notes or safe notes that have not converted? That just makes for a horribly difficult cap table, and unwinding that, you end up not knowing who owns what and how much. So that's also a big no-no for us. Another one, and this is kind of logical, but not, is if you have a criminal record. That is a heck of a hard no. And our due diligence, the first thing that we do is, we do a background check. And within 24 hours, yeah, I'm sorry, we just can't invest in founders that have a criminal record. Especially securities fraud. Securities fraud.
Well, there is
that.
this notion of bad actor that applies to investors, right? If you cross a line, then you get banned from being an angel investor. You can't invest in companies. And if you are touching companies where the founders cross that line, then it's very easy for that to get buried. So there's consequences in there besides losing your money that might be a problem. Anyway, Chris, go ahead.
You also reminded me of something. If an entrepreneur doesn't know their numbers, just the basic financials, doesn't have the market size, can't answer simple questions, they're going to get filtered out pretty quickly. So you've got to come buttoned up when you present to angel groups.
Yeah. So going on to the next question, how do you feel about founders dating multiple investor groups at once? Let's leave it at that. Go ahead.
I feel. Go ahead.
Well, I wouldn't consider it dating. I consider it fundraising. Yeah. It's like, fill your round. You're going to need all of us here in this room to fill your round. We're going to take 150, 200, 300,000. How are you going to fill $1 million if you only date one person? I would say there's nothing like dating angel groups. It's like
totally agree. Totally agree. And I think it's also important for founders to remember that investors talk to each other. And so make sure that you're giving clear, consistent information to everyone, because any incongruencies there, you may not be committing securities fraud, but, investors will take note, and, and that can cause them to absolutely back away from the investment.
So the fundamental currency of angel investing is trust. And if you do anything that breaks trust, then the game's over and you don't get to play. Juan, can you take a moment and talk about your syndication efforts and how your syndication efforts work?
This is
facilitate the process of filling rounds, right?
Yeah, no, this is really fun. So starting last year in January, we began the Querétaro Syndication Network. Now we're 28 angel groups. And we meet once a month for an hour. We have 6 companies pitch for 3 minutes, 2 minutes Q&A. E8 is with us. PSVC is with us. Dan is with us. Swan is with us. Almost all of you guys are in this group. And it's just a way to promote fantastic deals so they can get follow-on funding. There is no expectation to follow any process, but on average, a company can walk away with interest from 6 angel groups in one single meeting.
Yeah, and I've seen it work very well.
Say no company has ever failed due to lack of funds.
What?
No company has failed due to lack of funds. There was some other reason that caused the lack of funds when they ran out of money.
Every company's failed because of lack of funds.
That's right. If you don't raise enough funds, you're going to fail. but if you have enough funds and then you fail to execute, that's on you. That's not because you didn't raise enough money.
There is such a thing as being undercapitalized, right? And maybe that's what you're talking about, which is, and that's why when you're first, you go and you talk to angels and they're like, great, I'll write you a $25K check, but I want to be confident that you're going to fill your whole round, because I can't, me just giving you $25,000 and you can't raise any more than that is going to vastly undercapitalize you. It won't get you far enough, and I'll lose my money and you won't have gotten anywhere. So I think that there is something to that. And that plays out even at the larger scale. When we're talking about, $1 million round or $2 million round, is undercapitalizing yourself is never a place that the investor or the entrepreneur wants to be.
What Minda was just talking about is why it's hardest. The hardest step for the entrepreneur in terms of fundraising is the first one, to get the lead investor who's willing to commit is key to recruiting additional funding.
Right. So Eric, we have a question wanting you to define what clean tech means to you.
Oh boy! So we are a 130 member organization. I think that means there's probably 150 different definitions of clean tech. So I can give you my definition. My definition is anything where there is a direct and intrinsic connection to the sustainability of the planet. And what I mean by direct is you don't have to squint all that hard to see how the success of your company leads to greater sustainability. And intrinsic means that it isn't just an incidental side effect to what you're doing. You could argue Zoom is clean tech because Zoom reduces commutes and enables virtual collaboration. Yeah, that's true. So it reduces miles driven and stuff like that. But that's kind of off to the side. So as a practical matter, the kinds of things that we consider as clean tech are obviously renewable energy, energy efficiency, energy storage. Those are sort of sweet spot. But we also consider things like clean water, waste reduction, waste reuse and recycling, sustainable agriculture. All of those are within our clean tech. And occasionally we find deals that we hadn't really thought of as clean tech. There was a deal we saw a few months ago that was using RNA analysis in water samples to detect invasive species. Yeah, no, that we call that clean tech. The more successful you are as a company, the better we can manage our lakes and rivers and streams. So yeah, we'll count that. So that's kind of, it's more of a rubric than a hard definition. That said, I do want to just get on my soapbox for just a quick moment and say we don't like to see concessionary returns. And for John's sake, I'll define concessionary return as, we won't say, normally we want to see something with an X IRR, but we're going to take a lower IRR, internal rate of return, because you're doing well. And we don't want to do that for three reasons. One is that if you can't make money, you're going to go bankrupt. And if you go bankrupt, your overall impact is zero. The second reason is that it's sort of an admission that that being sustainable is somehow not congruent with making money. And that is just opposite to our thesis. We think that you can have your cake and eat it too. You can make money, you can grow the economy, and you can direct things in a sustainable manner. And the third reason is if you have a premium because you're just more expensive than the non-sustainable alternative, then you have, and that's going to be a hard investment to make. So that's my soapbox. I'll get off it now.
Well, thanks. Let me move to the next question, which is, do any of you provide fractional executive support to the startups? How involved in the core CEO team or CXO team are you? Like Andreessen Horowitz provides, staffing support at an extreme level. Any of you do that?
That's more an incubation model or
Yeah.
more of an acceleration model than angel.
Right. So that's not what we do.
Maybe the board of directors.
Our members often will go on a board, but it's usually it's not the usual angel reason of we wrote a large check, therefore we get a seat on the board. It's usually either someone who's investing in a check has some industry expertise or otherwise has value that they can add in the sector. And so it's usually a result of us being clean tech partners.
Yeah. So typically when we invest, we're always looking for good governance structure because good governance structure means a higher chance of success for the company. the CEO and the team aren't necessarily thinking strategically all the time. So if we're leading a round, we're negotiating for a seat for the members who, of that round. Maybe someone within the group of investors can fill that seat. But yeah, it's still about, does it make sense? Is this going to contribute to the success of the company? That's sort of the goal. Some of our investors are attorneys and they practice IP law. Some of our investors are CFOs and they work with startups. But it's not offered as a service. It's the entrepreneur comes along and says, hey, we need help with IP, or we need help here. The entrepreneur has to say they need help, and then we might say, well, okay, talk to this person. But if one of our investors provides that service, they have to disclose that relationship to all of our investors just to avoid conflicts of interest. So it can actually be kind of a hairy situation that investors can get themselves into, so that they have to disclose that, hey, I'm promoting this deal, but I'm also working for them. But no, we don't do fractional.
Cool. All right, thanks. I think we're sort of running out of time to get the networking done that I want to do. So what I'm going to do is to break off here. You go to the rooms that are labeled for you, and people can come and ask you questions, and we'll hang around for a little bit while people are asking questions. Thank you so very much for coming. We really appreciate it. I hope that people got what they needed. I'm going to bring up John Dex to talk for a moment about SAC 21, and then we'll break. So I'm going to, if each of you would turn off your screen and so forth, I will bring John Dex up, assuming I can find him. John Dex, are you ready? Here you come. John Dex, are you there? I don't see a John Dex. All right. So there we go. There's Elizabeth coming in. There's Chris coming back on stage.
Hello.
Hi, Chris.
Chris, if you turn your camera back off, that'll take you off the stage.
I'll take him off stage here.
Okay.
Hi, John Dex. Could you talk a little bit about what SAC 21 is, please?
Sure. Well, Seattle Angel Conference, our 21st edition is coming up March 1st. Deadline for companies is February 24th. And we also have a few slots left for investors, but that's closing up pretty quick. Seattle Angel Conference is a competition for startups where they can earn up to $200,000 for the winner. And it's a program that teaches early stage investors about investing as they move through the process of seeing pitches, screening companies, seeing pitches, and performing due diligence. I've put my contact information in the chat. It's also on my profile. So if you are interested in being an investor, or if you have a company that is raising an early seed round, reach out to me or go to our website for more information.
Thanks so very much, John.
Yeah,
Elizabeth, you want to say something about APIS?
So I mentioned earlier that APIS is into our evaluating our quarterfinals right now, and we will be announcing a little bit more about the companies that are participating as us through our social media. So if you follow the LinkedIn profile for APIS Health Angels, and I'll put it into the chat.
Cool. Thank you so very much. So I'm going to turn off the screen now, and everybody can mingle with their favorite